So today I want to give you a plain simple video talking about inheritance tax bands and what you can do about it long term. So there is a IHT lifetime allowance band of £325,000 per person. As a couple, that is of course increased to £650,000. You have an additional band as well, which is often not utilised, which is the Residential Nil Rate Band, or RNRB, not rhythm and blues, which is £175,000 or £350,000 for the couple. And then if you add those two together, funny enough, 325 and 175, that's £500,000. Add the other two together, you get £1 million. So you can give away, as a couple, £1 million worth of assets to your loved ones without paying any inheritance tax. Unfortunately, anything in excess of that will be subject to 40% tax. And as values increase, that amount of tax will hurt a lot of people going forward, especially with pensions coming into the fray from April 2027. Now, I've got some resources that you can use for absolutely zero money. There's a free ebook on legacy which you could download using the QR code, or watch our legacy training course. Again, the QR code is there, but you can get the links from the description box as well. Alright, so let's talk about inheritance tax bands. The problem is that some nil rate bands are often wasted. And I say that because someone may go overkill with their gifts and then pay capital gains tax, when they could have used their £325,000 nil rate band for inheritance tax purposes and paid zero tax by gifting it to their loved ones on death. But sometimes they give away so much in their lifetime, and then when they die, their assets aren't even £325,000, which is meaning that they've paid more tax potentially before they've died. Loss of residential nil rate band. There's many ways, by the way, you can lose your residential nil rate band. If you have a home in your name and you put it into a trust rather than to a direct descendant, then the residential nil rate band is lost. So that is a bad planning technique that you can adopt straight away. Equally, if you've got assets over 2 million, then your residential nil rate band will also be tapered down. So you lose it that way. Gifts may be made within 7 years, but it may be too late in life. And therefore, if it's within 7 years of making that gift and your death, then those assets could be pulled back into your estate and taxed accordingly, which if you did some gifting way beforehand, you wouldn't have that problem. Using trusts. Many people like to use trusts. They are complex, and maybe solicitors will tell you the true pros and cons, but then you may get overwhelmed. You use a trust and you're not aware of the 10-year charge, which is quite painful. It's also quite costly to set up a trust and maintain it as well, which, by the way, the trust has to do a tax return as well. So there's a lot of administration, there is a lot of costs associated with a trust, and you may not have needed that trust at all. Not transferring allowances on death. Did you know that if you pass away and your remainder is still going to be living, you could utilise your nil rate band of that £325,000 and your residential nil rate band and transfer it to the remainder. That's not always picked up, and that means that remainder, who's forgotten that these allowances can be transferred over, pays more inheritance tax on their death, which is a real shame. So example issues I want you to remember. Loss of residential nil rate band. So a couple with assets of £3 million loses their residential nil rate band altogether. Therefore, they have a huge IHT bill, which could have been reduced in part with the residential nil rate band. Business rollover. Business assets are sold before they pass away, which again, some people do. They retire, but then they pass away soon after and then lose this business rollover relief, which they could have got if their family took over that business, which is really an important feature of succession planning, which is what we do with our clients. So if you have gifts and you've made that within 7 years of passing, then that could still well be taxable. You need to plan and record your gifts to make sure that you understand when it's outside of the scope of inheritance tax entirely, or whether it's still in scope. You need to help your executor, you need to help your solicitor to document them well. Some of the solutions that we can help you implement, you can, by the way, you can discuss our services, use that QR code about our legacy services. But one thing I would say to you is review your will regularly. There are so many events that will change and impact your will. I would review your will every 3 to 5 years. Make gifts and plan for them. You need to make sure that you gift them for 7 years and then they fall outside of your inheritance tax. There are some trip ups with that one. I won't go into detail with this video, but you do need to be mindful of how many gifts you make and the frequency of those gifts. Make use of a family investment company. You may have heard me on YouTube videos talking about buy-to-let properties inside of family investment companies. My research has been helpful to understand that you can still utilize a family investment companies by buying other types of investments, not just buy-to-lets, and still maintain a very healthy position for inheritance tax purposes. Maximize IHT RNRB. Again, let's make sure that you do not fall foul of not utilizing the NED bands or losing the residential nil rate band because you keep £3 million worth of estate asset value, for example, like we saw before. Reduce net assets below 2 million, as we've just mentioned, and keep your residential nil rate band altogether. And then think about this: assets grow in value, and therefore you need to do regular reviews of your inheritance tax position. Again, people try and do inheritance tax planning, and then 5 years later, their problem is exacerbated because they haven't done anything in the first review, and that is a huge problem. Discuss succession planning with family. It's really important for you to do that. I think to really discuss what is going to happen to your assets after you have passed away is so vitally important. I have seen families fall out even on that point. Well, I don't want assets. I don't want your buy-to-let property portfolio. Thank you very much. I don't want this business. I don't like that car. You know, there's so many things you need to iron out when it comes to gifting and succession planning of your business activities, your investment activities. Think about your parents. Now, you may be thinking, well, you know, when I die, it's their problem, not mine. But now let's flip that table over, because what about your parents? What are they leaving you? And that's something I want to finalize on this point of this video. So I won't go in any more. If you're not this is not your issue, because your children will benefit from your assets. So why should it matter? Now let's flip that. What are your parents leaving you? What problems will you face when they pass on? All right, so hopefully that video has been useful, even though I So my name is Simon Mishevich. I can even say my own name. Optimised Accountants, UK Investment Tax Specialist. There's our website. Please book a call with us using that QR code, or get your will done at least using that QR code. The links will all be at the bottom of this video in the description box. See you again soon.